everyone, and welcome back to Mach 1 Mindset. Today we're diving into AP European history, 1 point in the Commercial Revolution. Now before we get started, please make sure you like, subscribe, and of course, comment down below if you have any questions. Let's dive into it. Today we will examine the Commercial Revolution, a period from the 16th to the 18th centuries marked by the expansion of trade, finance, and agricultural production in Europe. The Commercial Revolution transformed Europe from a feudal economy into a market-based system and laid the foundation for modern capitalism. The Commercial Revolution was driven by European overseas expansion, the Columbian Exchange, and the growth of the colonial empires. It increased access to global markets, brought new goods, precious metals, and investment opportunities into Europe. As trade expanded, Europeans developed new financial institutions and economic practices to manage risk, capital, and large-scale commerce. One major feature of the Commercial Revolution was innovation in banking and finance. Merchants adopted double-entry bookkeeping, which improved accuracy and accountability in financial transactions. This system allowed businesses to track profits and losses more effectively and encouraged long-distance trade. Banks also expanded in size and in influence. The Bank of Amsterdam, founded in 1609, is often considered the first modern central bank. It has stabilized currency and facilitated international trade. As trade grew, carrying large amounts of gold and silver became impractical, leading to the use of banknotes and credit systems. Joint stock companies were another key development. These companies allowed multiple investors to pool capital and share risk. This made expensive overseas ventures possible and reduced the danger of individual financial ruin. The Dutch East India Company and the British East India Company became powerful multinational corporations that dominated trade in Asia and contributed to European economic growth. As commerce expanded, wealth shifted away from the traditional feudal nobles towards merchants and bakers. Families such as the Medici family in Italy and the Fugger family in Germany gained influence through finance rather than land ownership. This marked the rise of a new economic elite and weakened the dominance of the medieval feudal system. The Commercial Revolution also transformed agriculture, particularly in Western Europe. Landowners adopted new farming techniques such as crop rotation, scientific fertilization, and the use of nitrogen, restoring crops like turnips and clover. These innovations significantly increased agricultural productivity. One of the most important changes was the enclosure movement. Land that had once been held communally was enclosed and converted into private property. Enclosure allowed landowners to farm more efficiently and generated greater profits. However, it displaced many peasants who relied on common land for survival. As a result, rural poverty increased and many displaced peasants migrated into cities to search for work. This urban migration provided a growing labor force that would later support industrialization. While landowners accumulated wealth, inequality deepened between social classes. Another major development of the Commercial Revolution was the price revolution. During the 16th and 17th centuries, Europe experienced widespread inflation. This was caused by an influx of gold and silver from the Americas, population growth after the Black Death, and increased demand for food and goods. Prices rose faster than wages, lowering living standards for many people. Urban workers and peasants were especially affected, while landowners and merchants often benefited from the higher prices. The price revolution highlighted the growing gap between the rich and poor and increased social tension across Europe. The social effects of the Commercial Revolution were uneven. A stronger middle class of merchants and professionals emerged, particularly in Western Europe. Cities expanded as centers of trade and finance. However, traditional social hierarchies remained influential, and many people continued to live at subsistence levels. Regional differences became more pronounced. Western Europe moved towards a peasantry and commercial agriculture, while Eastern Europe reinforced serfdom as nobles sought to export grain to Western markets. This economic divide would shape European development for centuries. Environmental and demographic factors also influenced the period. The Little Ice Age caused poor harvest and food shortages, further stressing European populations. Despite economic growth, many Europeans faced instability and hardship. In conclusion, the Commercial Revolution reshaped Europe's economy and society. It expanded global trade, introduced modern banking and finance, transformed agriculture, and increased social inequality. By shifting Europe towards a market-based economy and encouraging capital accumulation, the Commercial Revolution laid the groundwork for the Industrial Revolution and modern global economy.